Okay, so you should have already gone over your notes for chapter 21. Um, this section is over accounting for interest at the fiscal year. It's accrued revenue. And accrued revenue is revenue that's earned in one fiscal period but not received until a later fiscal period. So you have to adjust entries and that kind of thing, and we're going to go over that. So let's start here. Says on December 31st of the current year, Maris Corporation has one note receivable outstanding, a 120-day, 12%, $4,000 note dated November 16th. Now, calculating interest we did in the last chapter, chapter 20, and I included a reference for you in your notes. But let's go ahead and calculate this. You'll remember we've got the note began November 16th and the year is ending the 31st. So we need to calculate the interest for these days. So we know that November has 30 days in the month. So we're going to say 30 and we're going to subtract out the first 16 days of November because they didn't start the loan until November 16th. Then we're going to add all of the December days, which are 31 days in December, and we'll have 45. So 45 is what you divide by 360. So we'll divide that by 360. I'm just taking this formula directly from your notes or from chapter 20 if you want to reference that. And then we're going to multiply that times 4,000, which is the amount of the note. And then we're going to multiply again times the percentage, so times 12%. And we get $60. So that's the accrued revenue for November 16th through December 31st. So it says to plan the adjustment on a worksheet. So here is our worksheet. An interest receivable. We're going to have an adjustment of $60 in the debit column. And then interest income, we're going to have an adjustment in the credit column. And that's just simply, we're just doing the adjustments right now. If this had the income statement or balance sheet over here, we would go ahead and pull these numbers over. But it doesn't have that, so we don't have to worry about it. Okay, number 2 says to journalize and post the adjusting entry for accrued interest income on December 31st. Use page 14 of a general journal. So we're journalizing in the general journal, and we're also going to post these adjusting entries. So we'll open this up, and we're putting in our adjusting entries. So we have to put our title. And first we are going to, this is for December 31st, first we are going to debit interest receivable for $60. And then we're going to credit interest income for $60. And now we're going to go ahead and post these two. So let's come down here. And our first one is interest receivable. And this is coming from General Journal 14. And we're transferring this debit over here. So it goes in the debit column, and our balance then will be $60. And we put our account number 1120 up here in the post reference, and that tells us that we have posted this. We don't have to do that now. All right, so now we're going to go post interest income. So let's find that account. It's the 31st. Getting that from the General Journal 14. And this is a credit of $60. So a credit plus a credit we're going to add. So we have $15.45 plus $60, $16.05. Oops. Okay, now let's go. We've done number 2. Number 3, journalize and post the closing entry for interest income using page 14 of a general journal. Okay, so we're going to go to our closing entries. We need to put our title. And again, it's December 31st. And we are closing these out. So we're going to do our interest income. And told us to close out the interest income. So our interest income account, to close it out, we would have to debit $16.05. So we are going to debit $16.05 because we have a credit here and that would take it to 0. And then we're going to credit income summary. And I'm pretty sure it told us to post this, but I just want to make sure. Journalize and post the closing entry for interest income. Yes, okay. So let's go post this. So interest income on the 31st from General Journal 14. We had a debit of $16.05. And that would be a 0. Oops, over here. I couldn't remember if I'm supposed to put a 0 there or just leave it blank, but you are supposed to put a 0. Okay, and then let's take that account number back up here. Oopsies. And then let's go to income summary. And the date is December 31st. It's from G14. And we are crediting $16.05. Take our account number right there. Okay, let's go back up. Closing entries, so we journalize and we posted. Now it says to journalize and post the January 1 reversing entry for accrued interest income on page 15 of the General Journal. Okay, so reversing entries are exact opposites of your adjusting entries. So we are journalizing and posting. Okay, so let's go down to our General Journal page 15. Our title is Reversing Entries, and this is January 1st. And we're going to do interest income. And we are just doing the opposite. So we would debit our interest income. and credit our interest receivable, $60. So let's go and let's post these now. Interest income. This is now January 1st. This is coming from the General Journal, page 15. And it's a $60 debit. So we're going to have $60 here. And this is basically going to take out the $60 that we would show when the note became, when they paid off the note. It would take that out and show that this was paid the previous year. Okay, so we've done that, and now let's do the, our account number is 7110, and then interest receivable. Let's go post that. General Journal 15, and that's a credit of $60. So this would be a 0. So we've done both of those. Now it says to journalize the receipt of cash for the maturity value of the note on March 16th. Receipt number 32. Use page 16 of the cash receipts journal. Post the amounts in the general columns. Okay, so let's go down to, first of all, let's calculate our interest amount for January 1st through March 16th. So let's do that. We've got 31 days in January, 28 days in February, and then 16 days in March. So we have 75 days. We're going to divide this by 360 and then multiply that times 4,000 and then multiply that times 12%. And I feel like this is wrong. It is. Let's try it again. 75 divided by 360 times 4,000 times 12%. And this is wrong. So 75 divided by 360 times 4,000. It's just not coming up right. So put this in your calculator because this works when I do it on my phone. So on your calculator, put in 75 divided by 360. Then multiply times 4,000. And then multiply times 12%. And you should get $100. Okay. So we have, we have $100. And we're going to put this in our cash receipts. But remember, we want to add the interest from the previous year as well, so it's going to be 160. So first of all, on March 16th, and I believe that was receipt number 32. And we are crediting $4,000. Because that is the amount of the loan. Then over here under interest income, we are going to put $160. Okay, so this is the $100 from January through March 16th, and it's the $60 that we calculated from November 16th through December 31st. Then we add both of these numbers, and that's the cash amount that we're receiving. So $41.60 goes there. Now we're going to post these. So let's go to Notes Receivable. And on March 16th, from Cash Receipts 16, we had a credit of $4,000. That takes that to 0. Then we're going to put the account number 1115 up here because we know that we have now posted that. Then let's go to interest income. And we're going to put March 16th. We're getting that from Cash Receipts 16. And it's a credit of $160. And you'll notice 160 minus 60, we're going to have 100 there. So it's taking interest income for this year is 100. And interest income for last year was $60. This gets put like in the, so your interest income, the year prior, November 16th through December 31st, at the end of the year, you're showing that interest as an asset. And so you need to calculate that into taxes and everything else. So we have to show that that interest was earned, even though we didn't receive it in that year. And then now this year, we're only calculating the interest that we earned this year and keeping track of that for tax purposes and asset purposes. Okay. Now I believe we have everything filled in and completed. Let's make sure. Journalize the cash receipt and maturity value on the notes. Post the amounts in the general columns. Okay, so we are done. So you guys are to do 21-1 on your own.